One of the many benefits of being a Mott's Wealth Management client is the opportunity to meet and speak with industry specialists and professionals. Our speaker for the Forecast 2012 Past and Present is Melissa Motts, President of Mott's Wealth Management. She has over 25 years experience in the tax and financial industry, is a CFP, CPA, and has a master's in taxation. This presentation was recorded on February 23, 2012.
Thank you everyone for coming on this first day of spring, in my opinion anyway. My crocuses are open, so to me that means spring is here. Yeah. I wanted to thank Pam and Jean and Jen for taking care of all the arrangements for this and all the things they do to support all of our clients and me throughout the year. So thank you, Jean, Jen, and Pam. And I also wanted to thank Matt Del Zangaro, who's standing up in the back. He is our sponsor for the event tonight. Thank you, Matt. Thank you. And the cheesecake is his grandmother's recipe, and it's homemade. Yeah, thank you. I love it. I had some for Christmas, so I know how good it is. And Matt is a Senior Vice President with Cole Real Estate Investment Trust. So we do utilize his investments, and that's why he's here. So thank you again, Matt. All right. Our next event is the Halftime Report, and that's on August 16th. And that's going to be here at the Hotel Fille Soleil also. And these events are perfect opportunities for you to bring someone to meet us, to meet Mott's Wealth Management, myself, Jean, Pam, Jen, and in a very non-threatening environment. So we encourage you to do that and welcome all the guests that are here tonight. We also have a client conference call on May 23rd that's going to be coming up, and you'll be getting emails about that as well. And if you'd like to attend any of these events, let Jen, Jean, or Pam know. We're doing a Indian Creek Roll and Stroll again this year that benefits Indian Creek Foundation, local charity. And last year, there were 4 of us that participated. That was Jen, Jean, myself, and Pam. So we're hoping to get some rollers and strollers to come with us this year. Roll is, you can ride bikes too, I believe. Yeah, we just strolled. Oh, it wasn't far. Was it about, we did a 5K. Yeah, yeah. And we just walked. That's what we did. Yeah. So it was fun. It was a beautiful day. And they had lots of rest stops along the way with food and drinks and so forth. So it was really great. And then also, if you're interested in introducing us to someone who you think can benefit from our services, but they can't make an event like this, please let me know. We can just arrange something privately, you know, to get together in another very social atmosphere. Okay, a couple housekeeping things. We have a birthday tomorrow. Miriam Cannon, it's your birthday tomorrow. Happy birthday. And and Guy Malik, it was your birthday on the 19th. Yeah, so happy birthday to you as well. And we have all the birthdays at one table in February. June Tornetta's, your birthday was on February 11th, so happy birthday to you too. Great. All righty. But we did want to thank some people that brought someone tonight. So, Paula, you're going to be receiving a little gift basket, thanking you for bringing some guests to introduce to us. Teresa Bisi as well. Sam Swanson, and Rita Klein. So thank you very much. All right. Kondrativ wave. Kondrativ wave. We're going to teach you some things about market language here. It's either A, a theory which says the size and frequency of ocean waves can predict stock market cycles. B, a theory which says Western capitalist economies are susceptible to high performance volatility. That's a mouthful. Or the Russian version of the princess wave. B? All right. No fooling you. Answer is B. Head and shoulders. This is a technical term. A chart pattern that signals a security is likely to move against the previous trend. Another name for blue chip companies that are head and shoulders above the rest. Or a dandruff shampoo. A. It's A. Yeah, you can actually see them in patterns when you look at stock movements and so forth. They make a head and shoulders, both ways, down and then back up again. Angel bond. A name given to bonds that were issued to finance James Bond films. Investment grade bonds that pay a lower interest rate because of the issuing company's high credit rating, or the tight relationship among the original 3 Charlie's Angels. And B, the answer, again. All right. And foam the runway. A term indicating last-minute infusion of cash into a company about to go bankrupt. A prank played on new broker trainees in Wall Street where their phones are greased. Or a children's game also known as slip and slide. A is the answer. All right, and our last, what does CIVETS mean? An acronym for Colombia, Indonesia, Vietnam, Egypt, Turkey, and South Africa. So they're touted as the next generation of tiger economies, kind of like Brazil, Russia, India, China, as the BRICS were. A name given to several species of small, mostly nocturnal mammals native to Asia and Africa, or an all-female rock band from Los Angeles. All of the above. All of the above. Okay. So, our objective here is to review where we've been, where we are, and where we're going. So we'll do our best. Okay, big stories. So where we've been, 2011, Europe in crisis. And it was just this week that the Parliament of Greece approved the bailout, the austerity measures that Greece had to agree to get their money, because they have a lot of money in bonds coming due in March. And without that money, they would be in default, which means the banks that hold them would not get their money, which means the insurance that insures those bonds would have to pay, and we'd have this situation like we had with Lehman Brothers around the world, where all these banks would be held, they'd have to come up with the money. So, the causes: excessive government spending leading to excessive government debt coupled with slow economic growth. Sounds a little bit familiar. There are some things that I've read that say that, okay, once Europe kind of gets their act together, next will be Japan and then the United States as far as these kinds of things happening. So, so we'll see. I mean, some of the other things last year, we had our country's credit rating downgraded in August, which spurred a hugely volatile market. It was, I'm so glad it's over. I mean, that was horrible, the fall. So 2011, a lot of fear. And then the other issue, which they are actually working on, and they're finding that they're going to need to do this, is, I mean, for instance, Greece is being forced essentially to do this. Their people are going to be forced into these austerity measures. They did not vote for any of the people that are on the European Central Bank or any of the finance ministers from all these other countries that decided what their fate was going to be. So they're going to need to, Europe is going to need to get some sort of fiscal union to support this monetary union they have of sharing that currency in order for it to work, and they are starting that. But it takes time. I mean, these are a lot of countries, and unfortunately, they're kind of like us, in our government, where it's down to the wire. It's literally down to the wire before they do what they have to do. When the history books are written, 2011 may go down as the year when political risk trumped economics, earnings, all the normal things that typically drive market forces, interest rates, etc.